Warren Buffett built a fortune worth over $100 billion using one powerful strategy: compound interest. He started investing at just 11 years old, proving that time and patience are key. Unlike risky traders, Buffett focused on slow, steady growth. He believed in holding quality investments for decades, letting them multiply. His disciplined approach turned small investments into massive wealth. He avoided speculation and focused on businesses with long-term potential. His success wasn't about luck. It was about smart decisions and consistency. Understanding his principles can help anyone build wealth over time. By thinking long-term and making wise investments, financial freedom becomes possible. Buffett's strategy works for anyone willing to stay patient and disciplined. Like and subscribe to learn how compound interest can work for you. 1. Warren Buffett started investing early and stayed patient. He bought his first stock at age 11 and never stopped. He knew time was his greatest advantage. Most investors chase quick profits, but Buffett played the long game. He reinvested earnings and let his money grow. Over decades, small gains turned into massive wealth. This strategy, known as compound interest, made him a billionaire. He didn't rely on luck. He relied on time and smart choices. Even during market crashes, he stayed focused. His patience paid off, proving that wealth grows with time. 2. Buffett focused on businesses with strong fundamentals. He didn't gamble on trends or hype. He studied companies deeply before investing. He looked for businesses with steady profits, loyal customers, and growth potential. His philosophy was to buy great companies at fair prices. He avoided companies that couldn't survive economic downturns. His biggest investments were in industries that stood the test of time. This strategy ensured steady returns and minimized risk. He believed owning part of a strong business was better than chasing short-term gains. His focus on value helped him build lasting wealth. 3. The power of compound interest fueled Buffett's success. Instead of spending profits, he reinvested them. Every dollar he earned worked to make more dollars. Over time, small investments multiplied into billions. He compared compounding to a snowball rolling downhill. The longer it rolls, the bigger it gets. Many investors underestimate the power of compounding. Buffett understood that even modest returns grow exponentially over decades. His patience allowed his wealth to snowball. Anyone can use this principle to build financial security. 4. Buffett avoided debt and lived below his means. Despite being a billionaire, he lived in the same house for decades. He never spent recklessly or took unnecessary risks. He believed financial freedom comes from smart money management. He avoided credit card debt and expensive loans. Instead of spending on luxuries, he invested his money. He valued financial security over material possessions. This disciplined lifestyle helped him grow and protect his wealth. His simple habits can teach anyone how to manage money wisely. 5. He saw market downturns as opportunities. While others panicked during crashes, Buffett invested more. He believed that great companies were temporarily undervalued during recessions. Instead of fearing market dips, he took advantage of them. He called this strategy being greedy when others are fearful. This mindset helped him buy stocks at bargain prices. He knew that the market always recovered in the long run. While others sold in fear, he built his fortune. His ability to stay calm in crisis made him one of the world's greatest investors. 6. Buffett believed in long-term investing, not trading. He didn't jump in and out of stocks for quick gains. His philosophy was simple: buy and hold. He once said, "Our favorite holding period is forever." He ignored daily market fluctuations and focused on decades. While traders tried to time the market, Buffett let time work for him. This approach saved him from unnecessary losses. Holding quality investments for years allowed compounding to work its magic. His method proved that patience beats short-term speculation. 7. Diversification wasn't his main focus. Unlike many investors, Buffett concentrated his money in a few great companies. He believed in knowing his investments well rather than spreading money thin. His approach was to put big bets on businesses he truly understood. He called diversification protection against ignorance. He invested heavily in companies like Coca-Cola, Apple, and American Express. This strategy worked because he chose companies with proven stability. While others spread their investments too thin, Buffett built wealth with focused choices. 8. He stayed emotionally disciplined and ignored market noise. Many investors react emotionally to news, causing panic buying or selling. Buffett remained calm, sticking to his strategy. He never let fear or excitement influence his decisions. He focused on facts, not opinions. He didn't follow trends or hot stocks. His ability to stay rational gave him an edge over emotional investors. Sticking to his plan through all market conditions ensured long-term success. His discipline made him one of the most consistent investors in history. 9. He reinvested dividends to accelerate growth. Many investors spend their dividend earnings, but Buffett reinvested his. Dividends provided a steady income stream that compounded over time. This strategy allowed his investments to grow even faster. He understood that small amounts reinvested consistently lead to massive wealth. His dividend-focused investments kept generating income for decades. This simple habit turned good investments into great ones. Anyone can use this approach to build passive income. 10. Warren Buffett's success is proof that wealth building is a long game. He didn't rely on shortcuts or get-rich-quick schemes. His philosophy of patience, discipline, and compound interest worked over time. He invested in businesses he understood and held them for years. He avoided emotional decisions and stayed focused on fundamentals. His principles can help anyone looking to build lasting wealth. Whether investing small or large amounts, time is the greatest asset. Like and subscribe for more insights on proven wealth-building strategies. Warren Buffett's journey proves that patience and smart investing create lasting wealth. His focus on compound interest turned small investments into billions over time. He avoided debt, stayed disciplined, and reinvested earnings for maximum growth. His strategy worked because he thought long-term, not short-term, avoiding unnecessary risks. Anyone can apply these principles to build financial security with consistency. Investing wisely and staying committed are the true keys to financial success. Learning from Buffett's disciplined approach can help anyone grow their wealth steadily. His philosophy shows that slow and steady always wins the race in investing. Financial freedom is possible for those who stay patient and make smart choices. His success wasn't about luck, it was about following proven principles. The power of compounding, discipline, and time can work for anyone. Buffett's life teaches that wealth building is a marathon, not a sprint. Staying focused and unemotional during market shifts is critical. Building wealth requires knowledge, strategy, and long-term thinking. Like and subscribe for more wealth-building strategies.